How much Solana crypto do you need to retire by 2030 or sooner? Let's actually do the math. And how much Cardano, or how much Ethereum or other crypto coins will you need? Watch today's whole video, because the 4% rule really offers us a jumping off point to see how much we need to accumulate.
The 4% rule refers to the Trinity study, and the Trinity study came out, I think, in the 1990s, if I remember correctly.
As explained by heavily respected author, investor, J.L. Collins.
And they measured what would happen to a portfolio, depending on how that portfolio was constructed, everywhere from 100% stocks to 100% bonds, if you adjusted a given withdrawal rate to account for inflation, as opposed to not doing it. And they came up with some remarkable sets of data.
So this rule suggests that because markets, like the stock market, tend to always go up over any 30-year sample, and the average stock market return is 7% per year, or 10% if you reinvest those dividends. But because of this, the 4% rule suggests that retirees can safely withdraw the amount equal to just 4% of their savings during the year they retire, and then adjust for inflation each subsequent year for the next 30 years, and safely have enough money to live off of.
But somebody, and I think it was somebody in the media, noticed that if you had at least 50% stocks and you withdrew 4% a year, and you adjust it for inflation every year, which is a pretty high bar, that portfolio would last for 30 years in 96% of the time. Another way to say that is it failed only twice. Only in 2 start years did it fail. And whoever observed this said, that's a pretty impressive success rate, and that became what's commonly now called the 4% rule. So the 4% rule says that you can withdraw from a given portfolio 4% of its value each year, and you can adjust it for inflation, and it will last, and your portfolio will last for 30 years. So I look at it more as the 4% guideline, because there's nothing that's guaranteed.
So right now, one Solana is valued at around $109, with its all-time high happening back in 2021 at $259 per Solana coin. Let's do both, but let's just start with this price. It's cool because we can just have AI do these calculations for us, and then I'll give you my thoughts. How much Solana, valued at $111, do I need to retire based on the 4% rule if my annual expenses are $100,000 per year? And some may say 100K is a little high. Actually, if you look at the latest data, as of 2020, the median household income in the United States was only $67.5 thousand, according to the Census Bureau. And that's income total. That's not expenses. Somebody's expenses might be even a little less. At least it's definitely not more than their income. But according to Forbes, they actually have slightly different numbers for expenses. The average expenses of US households in 2022 and 2021, for a family of 2, average expenses are $76,000 per year. For a family of 4, average expenses are over $100,000 per year. Now, even if you want a family, your kids most likely will be out of the house for the vast majority of your retirement. So we'll probably just need the family of 2 scenario annually. But I want to live good, so we'll just round up to 100K in expenses per year. Hit the like button. Well, it looks like you're quite the crypto enthusiast. To figure out how much SOL you need to retire, let's do some quick math. Assuming you're following the 4% rule, you'd need to have 25 times your annual expenses saved up. So 25 times $100,000, or $2.5 million. Now let's convert that to Solana. At $111 per SOL, you need to own 22,522 Solana to retire. Of course, assuming that prices only go up about 7% per year from here. Now, me personally, I'm speculating that prices at least get to its all-time highs in the next few years, if not higher. I mean, I can see SOL at $500 per coin. Again, I cannot see the future. I'm not a financial advisor. These are just my opinions. But actually just looking at the chart of the 4% rule, or in fact, putting this chart another way, how much do you need? If you want this salary per year, we said $100,000, you need this salary per month, which means you need invested $2.5 million. So what I'm saying is, whether it's stocks or crypto or whatever, you set your salary. There's just a certain amount of money you would need invested to have the lifestyle you want based on the 4% rule. And I loved these 90 seconds of investor Graham Stephan breaking this down.
Now, as you can see from the chart here, if you're 100% in the stock market and spend only 3% of it per year, it's safe to say your money is going to last you indefinitely with a 100% success rate. That's because the market on average returns anywhere from 7 to 9% annually. 2% of that gets deducted for inflation. So effectively, by spending 3%, that leaves you with a 2 to 4% buffer each and every year to let your investments continue to grow in value without you needing to do a single thing. Now, on the other hand, if you're 100% in the stock market and spend 5% per year, over 40 years, you'll only have a 76% chance of not running out of money by the end of those 40 years. That's pretty much a 1 in 4 chance you're going to be completely broke by the end of the time frame, which is not a place you want to be between the ages of 70 and 90. Now, this guideline is also known as the Trinity Study, and from all of this research, the 4% rule was born. That means if you want to live off an income of $40,000 a year without you ever needing to work another day in your entire life or make any more money, you'll need $1 million invested, and that will give you an 89% chance of lasting for the next 60 years without running out. This calculation also works in reverse as well. For example, if you have $100,000 invested, congratulations, you could effectively spend $333 a month adjusted for inflation each and every year in passive income, because that's how much your investments are going to be growing by every single year.
So let's now take this one step further and look at Solana if we can get to $500 per coin, as well as how much Cardano do you need to retire, how much Polkadot do you need to retire, how much Ethereum, and if you have a different coin you want me to break down in a future video, number one, click subscribe. It's an easy thing that you can do completely free that keeps you informed about crypto. And number two, comment down below which coin or coins I should look at next. So let's say that Solana in a few short years, dare to dream in the next 5 years, maybe it is at its fair value of $500 per coin. We still want those same expenses annually. And this is not to say that Solana won't stop at $500 per coin. Again, the reason this works is because you're assuming that investments are always appreciating and you're always compounding. And the results are, to retire with an annual expense of $100K per year, using the 4% rule, you would need a portfolio of $2.5 million. If you plan to use Solana, valued at $500 per coin, you would need 5,000 SOL. Today, 5,000 SOL at current prices is over $500,000 invested in Solana. Give me your thoughts on this. If we look at Polkadot, which is another blue chip crypto, some people call Polkadot the Solana killer. The all-time high was $54 per coin over 2 years ago, still down over 86%. Assuming we can get there in the next 1 to 5 years, put in the calculations, valued at $55 per dot. And this says you would need to accumulate today 45,454 DOT tokens. So putting that many tokens at today's current DOT price, you would need invested in dollars $327,000 invested today. Looking at Ethereum, which is around 2.5K per coin, at all-time highs, it was valued at 4.8K per coin. I think it could get to 10,000 minimum. Now putting in those ETH calculations, and wow, you would need today 250 Ethereum today to retire. Putting in that number at today's price, you would need to invest $625,000 today in ETH. And what I'm deducing in all of this is the higher cap coins you start out with, the more established coins, the more money you would have to invest today. So you would need to put in more, yet it is the more established, safer play. Yet the lower cap you go, the more risk you take on, but the less you would have to invest today. So just something to note. Cardano, right now valued at around 54 cents per coin. Its all-time high was $3.09 per coin. Let's just dare to dream and say we think Cardano can get to at least $10 per coin in the next 5, 6, 7 years. And then, of course, as the ecosystem builds, it's always going to keep appreciating, right? That's the theory we're going with any of these investments. According to this, you would need 250,000 ADA to retire today. And wow, to get this many Cardano today at the current ADA price, you would only need $135,000. Did I do that right? I think the reason you need so less money, I think it's probably because I speculated that Cardano would get, relatively speaking, so much higher than what I speculated those other coins to be. Either way, let me know what you think down below in the comment section. See you tomorrow.